As we reach the midpoint of the year, the resilience and vibrancy of our property markets have taken many people by surprise. Look, picture this: at the start of the year, somebody had predicted the current state of the housing markets. Very few would have believed them. But here we are, witnessing an incredible surge in house prices. Well, in fact, somebody, Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market, did, in fact, forecast house prices would turn up. He did that at the end of last year. And here we are experiencing a property boom that silenced many of the doubters. So today I'd like to delve into the specifics with Dr. Wilson and find out what's driving this unprecedented growth.
Yes, good day, Michael. Thank you very much for that accolade. But we have been here before over the decades, I suppose, been, against the doomsayers. But I think the doomsayers always tend to get a little carried away with their predictions and exaggerate the possibilities of house price crashes. So it makes our work a little bit easier, particularly since we're relying on, I guess you'd say, legitimate research to look at the housing market and its prospects, and also the historical evidence. And once again, we're bouncing back. And I think the key to all of this, regardless of higher interest rates, is just how strong our economy is. And of course, we've got to remember that although we've had quite a strong price growth this year so far, in our latest report, we'll just look at the latest numbers, we're still below where we were a year ago, Michael. So we're yet to get back to our previous price peaks, particularly Sydney and Melbourne of last year. So it is catch-up energy, but we saw that same sort of catch-up energy occurring during the COVID lockdowns. We saw it happen in 2019, but it's just the way our house cycle works, particularly when we've had those strong interruptions that we've had. And of course, the interruption last year was through higher interest rates.
Well, I've had a sneak peek and you just released a report for June, and the numbers reveal a booming housing landscape that's defied expectations. So let's dig into it. What did you find?
Well, the national house price up again over the June quarter. Of course, Michael, we measure quarterly house prices and unit prices. So that gives us 3 months of observation. So it's quite robust. There's certainly thousands of sales there that are modelled, but we do take it from on a month-to-month basis. So that means we have a rolling quarterly model. So every month we get to refresh it, but we're using quarterly data sets. Now, they're compositionally adjusted, so they take account for different composition mixes in the data set, such as a higher proportion of higher or lower price properties in any given period. And of course, that's the methodology that the ABS used to use and other modelers do use. So rather than just a month-by-month snapshot, which does use smaller observations and can be more volatile, or just taking it at the major quarters, and therefore you have to wait 3 months for your next observations, we have regular observations with significant data sets. And those data sets revealed another strengthening quarter over June. So that's the 3 months to June versus the 3 months to May. The national house price up by 1.2%, Michael, over that monthly period, now at $1,045,745, up compared to May. And that's the fastest monthly result that we've had this year so far. So certainly the national house price, which of course is based on a weighted average, the sales in each of the capitals. And of course, that means it significantly favours the larger capitals such as Sydney and Melbourne. But nonetheless, it does give us a feel, I guess the only feel that we can have for what's happening nationally. And of course, these are national capital city observations going forward. Now, I don't think we should be surprised with strong house price growth, Michael. We've seen auction clearance rates in Sydney and Melbourne. Sydney actually exceeded 80% clearance rates during June. Of course, there was some backtracks there. King's birthday weekend, early in June, the first weekend in June or second weekend in June. And then, of course, we had the final weekend in June where the mid-year school holidays were starting to impact activity in our auction markets. But nonetheless, we did see those 80% clearance rates in Sydney. And of course, we saw clearance rates in Melbourne pushing up towards 80% until the end of the month. So as we always mention, they're a clear precursor of what's happening broadly in housing markets. And again, that's proven to be the case. We're just 1.4% lower now on the national house price compared to where we were a year ago in June. So quickly catching up with where we were a year ago. And when we look at the breakdowns in terms of the capital cities, I mentioned there, of course, those 80% clearance rates in Sydney. They've translated into a 2% growth in house prices, Michael, over the month. That's a very strong result. Sydney is now up 6.8%, Michael, so far this year. So I think that those that were certainly the vast majority who predicted crashes have headed south in the absolute wrong direction. We're certainly on track to get a 10% increase in Sydney this year. Perhaps more than 10%, Michael, given that we're halfway through the year and we're nearly 7% up with Sydney house prices. But of course, we've got quite a midwinter market to get through, and that sees fewer buyers and sellers in the market, particularly higher and mid-price buyers and sellers. So, but of course, that bounces back in spring for the spring selling season. So, but halfway through the year, Sydney up nearly 7%. Melbourne prices up 0.7%. In fact, all capital cities, Michael, recorded higher median house prices over the June quarter. Canberra was the top performer, but we've been looking at Canberra recently, Michael, and we know that that's been an underperformer at the beginning part of this year. It came late to the, adjustment part of the cycle last year. It was very strong in the early part of last year, Michael, Canberra, but it has bounced back over recent months. Again, we've seen that with the clearance rates rising into the 60s and 70s in Canberra, and typically it follows that Sydney market upwards in terms of its cycle, but up by 3%, Michael, over the June quarter. Other significant performers, we had Brisbane up 0.8%, Melbourne up 0.7%, Perth also up 0.8%, and the underperformer was Hobart there, up by just 0.1%. And probably the Hobart market's been the underperformer. Its prices are actually down 3.6% this year. But when we look over the year, Perth's up 4.1%. As I mentioned, Sydney up 6.8% this year so far. Melbourne up 2.6%. National house price up 3.9%. And when we look at the comparisons with June last year, Sydney's just 1.5% lower now, Michael, than where it was a year ago. Melbourne 2% down, Brisbane 3.3% down. However, Perth's up by 4.4% over the year. So it remains the strongest market in terms of annualised prices growth. But we're certainly closing in on those numbers from last year, Michael. I guess that's what a revival, what a recovery is all about. And again, as I said, these are very strong numbers for June. They are building on what's been a clear revival just about across the board in our housing markets this year so far. So I guess we just have to traverse the midwinter market and await what happens in spring with seasonal revival.
We'll have a look at the unit market in just a moment, Andrew. This fast turnaround doesn't actually surprise me. If we look back, we've been around the block a couple of times. You look back at previous cycles after the COVID shock, we had a very fast turnaround in 2021 when buyer confidence resumed and markets shot up. Much the same happened in 2019 after that federal election surprise win by the Liberal government and confidence came back again. So it takes a while for sentiment from vendors to return, and therefore there's fewer properties on the market. People have been buying homes, but they're also moving to apartments, I guess partly because of affordability. So how are our apartments markets performing around Australia?
Yes, Michael, absolutely. And of course, I think the lessons, as you pointed out, that these interruptions to the housing market are just that. They're interruptions, and they tend to be shorter going forward now. Perhaps that's because the negativity that's promoted during these times is becoming largely perhaps more ignored going forward. And I do think, though, the real driver of these markets has been extraordinarily strong economic activity, with record low unemployment and wages growing at the fastest rate in 10 years, falling unemployed, rising jobs. Those factors eventually restore confidence in consumers, and I think that's what we've seen, and of course the value aspects. But as you're right, that unit prices also were up over the June quarter. National unit price up 0.9%. A little bit less than the 1.1% growth that was recorded in May, but these, if you multiply them by 12, are very strong results over the month. The national unit price, however, Michael, is down by just 0.4% compared to June last year. So it's basically now tracking to back where it was a year ago. And when we look at some of the results from the capital cities over the month, again, Sydney was a strong performer. Up by 1.1% over the month. Unit prices in Sydney are now up 4.4% over the year. When we look at the smaller markets, Michael, we have to be mindful that some of those smaller capital cities have quite a small unit market. So the results tend to be volatile from month to month because we're not looking at a lot of sales in those markets. It's more about the larger markets which have more units as part of their profile. But Sydney up 1.1%, Brisbane up 1%. over the month. Good result there for Brisbane. Hobart up 2.3%, but as I mentioned, has a very small unit market, so it tends to bounce around. Canberra down 3.2%. A little bit of softness in that Canberra unit market, Michael, which I think is interesting given the rebound we're seeing in the house market in Canberra. But Canberra's had strong growth in its units over recent years, so just consolidating a little bit there. When we look at the year so far, Sydney up 4.4%, I mentioned. Brisbane up 2.9%. The national unit price up 3.3%. Over the full year, Sydney's just down by 0.4%. So again, that's very close to where it was a year ago. Melbourne's still got some upside, I think, to that unit market. And we've been discussing, we think there is potential with the Melbourne market generally and specifically in units. Brisbane's up 5.9% over the past year, been a strong unit performer. Brisbane, Adelaide up 9.5%. But as I mentioned, that's a smaller market and can tend to be volatile. But nonetheless, good results there for Adelaide, and Perth up 5.6%. So we didn't have the same across the board increase from our capital cities, Michael, as we did with houses, with units. In fact, we had Canberra and Darwin falling over the quarter, whereas all the other capital cities were higher. But once again, Sydney leading the charge to some degree in the major markets, up by 1.1% over the month. And Melbourne also following, and Brisbane a similarly strong result to Sydney, up by 1%. So units aren't missing the boat, Michael. In fact, if anything, units have held their value better than houses over the last year.
Well, that's a bit different to what's happened over the last decade. But if you go back in the past, units have always been cheaper, but they've had similar long-term capital growth. But over the last decade, we just had so many new apartment towers being built that the supply and demand ratio was the wrong way around. Now it's the other way, with 500,000 migrants coming into Australia a year. It's actually going to be very hard for supply to keep up. I guess it shows that despite higher interest rates, there are other factors that affect our housing markets, Andrew.
Yeah, that's right, Mike. And I think that's the salient point here, that maybe the doomsayers got a little bit too carried away with the first interest rate increases in 10 years. Perhaps they didn't bother looking at their history books in terms of what does happen when interest rates increase, what happens to housing markets. Well, basically nothing happens to housing markets, Michael. In the shorter term, yes, it affects confidence. Yes, buyers and sellers sit on their hands. But as the sky doesn't fall in, the markets do start to recover. But as I said, the big picture here is that we've continued to sustain a very strong economy. In fact, our economy has strengthened over the past year, can you believe it, since we cut interest rates. It's getting stronger, not weaker, which isn't the plan. And I think that people are just happy to engage in improving their lives. And that means the big purchases as well as the smaller purchases, given strong wages growth and a full employment and lots of competition for available labour. And that means buying houses and units. And I think particularly given that they're still buying at a discount. And we shouldn't forget that it's still a discounted market. There are those value opportunities. We saw the same thing happen in 2019. We saw the same thing coming out of COVID. And this is the key factor. And I think also when we do talk about interest rates, Michael, that we should remember that perhaps the clouds are clearing a little bit in terms of the outlook for interest rates. Of course, we can't be certain here. This is a very fluid environment and we'll rely on the data coming through. But the Reserve Bank has clearly signalled, as we've discussed, that they're perhaps getting a little bit closer now to a pause, in that balancing act between do we put them up or do we pause? Are we worried about inflation or are we worried about an economic downturn? Maybe they're just becoming a bit more about the prospects of an economic downturn, and therefore they want to wait and see and hold rates. So we might get a pause sooner rather than later. And of course, that'll be good news for the housing market, Michael. And I think that pause that we had back in April was part of what's driven momentum in the markets over the last few months.
I just wanted to interrupt this week's Property Insider chat to remind you this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat with you to help you take advantage of the new property cycle. If you think about it, an opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and your options? Remember, we've got no properties for sale, but we offer strategic advice to give you directions, results, and certainty. This is the right time to get all your ducks in a row and get set for the opportunities that are going to abound. But be careful. Property investment is a process. It's not an event. So you can't just go off and buy any property and hope to be successful. Formulating a plan and getting the right advice is more critical than ever now. So why not have a chat with the team at Metropole? Go to metropole.com.au. What some of the doomsayers and naysayers got wrong was the fact that, yes, borrowing capacity has dropped and has dropped significantly, but that doesn't mean that a seller has to drop their price 20% because I can't afford to pay that price anymore. I've got to look in the next suburb or look for an apartment or look for a townhouse, and the person who's going to buy that property is going to be somebody who maybe could have afforded something different in the future. So buyers still get on with their life. People still get married, still get divorced, still have babies, and probably not in that order. And life moves on and people have to find accommodation. And now there's a whole lot of new people coming here forming households. And so that's going to keep underpinning our property markets.
Particularly given we're just not building anymore, Michael. And those longer term systemic problems with new building are being enhanced or exacerbated by high building costs. So even if you do get your building approval up, there's no guarantee you'll be able to make the job work because of high building costs. So that's only making it worse. It's a bit like Murphy's Law, isn't it, Michael? It sort of never rains, it pours. A perfect storm of demand over supply at the moment, and that'll only mean higher prices. I think the interesting thing looking forward, Michael, now is to see how the winter market affects what is certainly a rising and recovering housing market and house prices, how that winter market will affect it. Typically, July is the bottom of the seasonal cycle. That's the quiet period. It's very quiet here in Melbourne at the moment. Everybody's left, I think, and they're heading for warmer climes as they do. And while they're on holidays, I'm sure they'll be thinking about that spring buying and selling campaign, which is the way things work. Particularly given, as I said, if we get a pause in interest rates.
The cycle is going to move on, and every Tuesday we bring out our Property Insider video and we have our regular chats. Every Saturday night you record the auction results and they're available on your LinkedIn profile and on Property Update. And we'll be back again at the end of each month before the others to report a housing market update. Thanks for your time today, Andrew.
Yeah, thanks very much, Michael. And once again, I guess the housing market provides surprises for some, but for others, well, it's just the same old positive story.
Great. See you next Tuesday for our Property Insider chat.
Yeah, thanks a lot, Michael.